Are you looking for smart investment options? Today, we explore high-return mutual funds with low risk for 2026. First, let's understand mutual funds. Mutual funds pool money from many investors. A professional manager invests this money in various assets. Next, let's talk about returns. High-return mutual funds aim for significant profits over time. However, they often come with higher risks. So how do we find funds that balance risk and return? Look for funds with strong historical performance. Check their risk ratings from financial services. It's important to review fund objectives and strategies. Now, let's dive into the types of mutual funds. Equity funds invest primarily in stocks. They usually provide higher returns, but come with higher risks. Debt funds invest in fixed income securities. They are safer, but may offer lower returns. Balanced funds mix both stocks and bonds. They aim for moderate growth with lower risk. But what else should you consider? Fees and expenses eat into your returns. Look for funds with a low expense ratio. Fund managers' experience matters too. Research their track record before blindly investing. For 2026, sectors like technology and healthcare are promising. Funds focusing on these sectors may yield better returns. Let's look at an example. The XYZ Growth Fund has a strong history of returns. With diversification and low fees, it's worth considering. The past performance can be an indicator of future success. Remember, mutual funds involve risks. Always read the prospectus before investing. Summarizing our key points, choose funds with strong historical performance. Consider their risk ratings and manager experience. Look out for low fees and promising sectors. Ready to start investing smarter? Research and compare mutual funds today. Subscribe for more financial tips and strategies. Your financial future starts now.